Could ARM Holdings be the next big winner in the AI stock game? It's already closing in on Palantir's valuation, but will it surpass it by the end of 2025? Stick around, because today, we're diving into a battle of the titans in the world of AI-driven stocks. Hi. In today's video, we're going to explore why one AI stock, ARM Holdings, might just outpace Palantir by the end of 2025. Is ARM the next big name to watch in AI infrastructure? Or is it just a lot of hype? Thank you for watching, and please subscribe to my channel, TheFinanceSavvy, for more updates and insights. If you have any questions, feel free to reach out. Let's dive into the video. Alright, let's talk numbers first, because, as they say, the numbers don't lie. Palantir Technologies, a major player in the AI space, had a massive 2024, with its stock price skyrocketing 340%, making it the best-performing stock on the S&P 500. Currently, Palantir is worth an impressive $181.9 billion. But here's the kicker. ARM Holdings, with its current valuation of $148 billion, is on track to potentially surpass Palantir by the end of 2025. Why? It all boils down to ARM's dominance in power-efficient AI infrastructure and a few big upcoming catalysts. Let's start with ARM's business model. Unlike traditional semiconductor companies, ARM doesn't sell chips. It designs processors and licenses its intellectual property to other companies. That means it earns steady revenue from licensing fees and royalties on every unit sold. Think of it as owning the toll roads of the semiconductor world. Every time someone uses their road, ARM gets paid. Now, ARM already dominates the smartphone market, powering nearly 100% of devices globally. But here's where it gets interesting. ARM is gaining significant ground in data center servers, a market historically dominated by x86 chips from Intel and AMD. Why this shift? Simple: power efficiency. AI systems demand an enormous amount of energy, and ARM-based chips offer a cost-saving solution with their energy-efficient designs. And the biggest players are taking notice. Amazon's AWS, Google Cloud, and Microsoft Azure have all designed custom ARM-based chips, Graviton, Max, and Cobalt, respectively, for their data centers. And there's more to come. Nvidia, yes, the Nvidia, is preparing to launch its highly anticipated Grace Hopper superchip, which pairs Nvidia GPUs with ARM processors. Nvidia's CEO even called it the best product in the history of computing. That's a bold claim, but if it's true, it could mean major royalties for ARM. So, where's the stock heading? According to analysts, ARM needs to climb just 23% to $174 per share to match Palantir's valuation. And that's the conservative scenario. Morgan Stanley's bull case sees ARM hitting $300 per share by the end of 2025, representing a 112% upside from today's levels. Of course, no investment comes without risks. ARM's valuation is steep, trading at over 100 times adjusted earnings, but Wall Street projects the company's earnings to grow at an annualized rate of 33% through 2027. If ARM can keep beating those estimates, the stock could have plenty of room to run. So, what does this mean for investors? ARM's unique positioning in AI infrastructure, combined with its growing footprint in data centers, makes it a compelling play in the AI space. If you're looking to diversify beyond software-focused AI companies like Palantir, ARM might just be worth considering. And while we're on the subject of AI infrastructure, let's not overlook another key player flying under the radar: Supermicro, NASDAQ, SMCI. You may not hear as much buzz about this company compared to giants like Nvidia, ARM, or Palantir, but trust me, there's a lot to unpack here, especially when it comes to its cutting-edge liquid-cooled technology. Here's what happened recently. Shares of Supermicro surged 5% following a glowing assessment of its liquid-cooled innovation prospects. Why does this matter? Because liquid cooling isn't just another tech gimmick, it's becoming an essential component for advanced platforms like AI supercomputers and high-performance data centers. According to Lynx Equity, Nvidia's upcoming showcase at CES, particularly for its GB300 platform, could be a game-changer for Supermicro. Why? The GB300 platform is expected to demand even more sophisticated cooling solutions than its predecessor, the GB200. And guess who's leading the pack in liquid-cooled technology? That's right, Supermicro. Lynx Equity has highlighted the company's early lead in this field as a major competitive advantage that isn't likely to erode anytime soon. And here's where it gets even more interesting. Supermicro is perfectly positioned to ride the wave of other industry advancements. For instance, AMD's MI325X processor and Google's TPU-6, both of which demand liquid cooling, could open up massive opportunities for the company. In fact, Supermicro already has a solid track record with Google, having supplied liquid-cooled server solutions to its data centers. Now, let's address the elephant in the room. Supermicro stock does come with some volatility. There are ongoing concerns about the company's ability to meet regulatory filing deadlines and whispers of potential private capital raising efforts, which could make some investors nervous. That said, Lynx Equity points out that fresh capital might actually be necessary to fuel the growth of Supermicro's AI server business. So, while the road ahead may be bumpy, the long-term potential here is hard to ignore. To sum it up, Supermicro might not have the same brand recognition as ARM, Palantir, or Nvidia, but its leadership in liquid cooling could make it a crucial player in the AI infrastructure ecosystem. As the demand for more efficient and powerful data centers grows, Supermicro's innovative solutions could place it at the center of this tech revolution. How this fits into the bigger picture. So, when we talk about AI stocks to watch, the story isn't just about the household names. From Palantir's dominance in software to ARM's growing foothold in energy-efficient processors and now Supermicro's innovations in data center cooling, these companies are building the backbone of the AI-driven future. Each one brings something unique to the table, whether it's the software intelligence, processing power, or physical infrastructure needed to support the AI revolution. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights. Got questions or predictions about ARM's, Palantir's, and Supermicro's potential? Drop them in the comments below. I'd love to hear your thoughts. Until next time, take care and happy investing.